Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the reasoning behind the moves today so that we can better understand tomorrow. And this time around, we're going to take a look at the 30-year bonds. Now, the bonds overall are a slower moving market. If you're not familiar with the bonds, it's very equivalent to something like the S&P. They don't move a ton, but when they do move, they generally pick a direction and keep on going that way for a while. Now, yesterday, we had a really sharp spike lower that turned around into a huge run all the way back up to the highs, completely shutting down that entire move. And actually, the highs of that move started acting as an area of support when they came back to it. The buyers failed to really continue that move up through the end of the day, and they just kind of faded off into a descending wedge, working its way back down. And then we open up today right into that prior descending wedge. So right off the bat, we opened up gap higher, but pretty much in a range at an area of resistance. So there's going to be a little bit of hesitation to start the day off because not many people are going to trust the move right off the bat. We start seeing the buyers pressure through, but it goes into a doji. Maybe not. We need to see what they want to do here. And then they go full bull engulfing candle. Now we start seeing clues that not only do we have the wedge formation that's breaking out, it's breaking out obviously, and it's breaking out and kind of pulling back in a way, right? That little pullback right there. So with that breakout pullback of the descending wedge and the overall pending bullishness in the market, with the buyers obviously finding this area of resistance turned support as a very interesting level, we know the buyers are at least looking short term for a continued move higher, and that's the expectation. So a nice little bounce right there to buy it higher. Now, as this move continued, we never really had much of a pullback. The only pullback still closed as a bull candle. So all of these were either dojis or bull candles all the way up until we finally had a pullback right here. And that's the first one that we've had on that entire run higher. So there are likely going to be a lot of buyers that are stacked up trying to pick that move up. One other little caveat to this, if you notice, this area right here kind of acted as a little bit of a gapping point. They gapped above it. That leaves an open area that the market is going to want to come back and fill, and that's exactly what this did. It came back and filled it to the tick and then bounced right back up. That's another really nice reason to catch a short-term move back up towards the highs. And then, in typical bond fashion, it completely fell asleep for the next hour and a half. Now, again, if you're not familiar with the bonds, that's usually how it works. The morning move is pretty strong, and then it just kind of collapses apart. In this case, though, we can see the buyers tried to keep it going. They pulled back. They held a beautiful pullback, nice little shelf. They couldn't get the bears underneath it, which is a good sign for buyers. But when the buyers show back up to the party, they can't even close above the highs. Not even that. They also have the prior high a day that they have yet to test. So there are a lot of buyers that may still be in this move that are starting to get a little nervous up around this area. Now, with this huge momentum to the upside falling apart a little bit, it's hard to be the first one to the party to want to sell. But when you see the buyers fail, the sellers push down, the buyers try again, and they can't even break their prior candles, and then it dumps back down with a huge bear candle, obviously the sentiment is shifting. Something has changed in the market where now the bulls have turned into bears. The buyers are exiting the market, and that will cause a pull down, likely to at least the lows of where we started and probably a little bit further. So the fact that we pushed all the way down, that's a beautiful reason to become a seller to drive the market back down until we get down to the lows. We get down to the lows, we test the bottom of that first candle of the day to the tick with a huge bear candle and all weakness, right? Not a single good-looking candle after that one formed for the bears. And that's a big clue that this low, at least in the short term, is probably going to hold, and the buyers may just look to retrace back up in to where they had that earlier shelf formation and use it as resistance. They push back up in. Nice opportunity to become a buyer right there and sweep the market back into that location where the market tried one more time to get a huge bull breakout and utterly fell apart once again. And that left an open opportunity to become a seller, knowing that now we've got a double top, a complete buyer failure. We still have a buyer failure off the highs, and we're now seeing the sellers confirm that they own this market, and they drive the market back down. Same situation that we had over here, nice strong move. Very first pullback that they had, very small, not a very big move by any means, but in the context, we see the sellers slamming the market down. They're probably going to continue down for maybe an ABCD leg lower, and that's what we got out of this one. So another opportunity to drive the market lower and complete that move down. So a beautiful day on bonds, even for such a slow market. You can see just breaking it apart a little bit can offer up a lot of opportunities. So that's going to do it for this one. Hopefully you found it useful. Hopefully you found it interesting, and maybe you learned something. And until next time, have a good weekend, everyone, and we will see you all on Monday.